Hello and a very warm welcome. You're watching Policy Watch with your host Kriti Mishra. Niti Aayog and Rocky Mountain Institute released a new report, Mobilizing Electric Vehicle Financing in India, which highlights the role of finance in India's transition to electric vehicles and analyzes that the transition will require a cumulative capital investment of 19.7 lakh crore in the EVs, charging infrastructure and batteries over the next decade. India's EV ecosystem has thus far focused on overcoming adoption hurdles associated with technology cost, infrastructure availability, and consumer behavior. Financing is the next critical barrier that needs to be addressed and accelerate India's electric mobility transition. The report further determines that investment in India's transition to electric mobility has the potential to create significant economic, social, and environmental benefits for the country. And to discuss the way forward, I'm joined by Mr. Randhir Singh, Senior Specialist E-Mobility, Niti Aayog, and Akshama Ghate, Principal, Rocky Mountain Institute. Welcome to Sunset TV, both of you. Mr. Singh, coming to you first. Take us through the highlights of the report on mobilizing finance for EVs in India, released by Niti Aayog and Rocky Mountain Institute.
Thank you, Kriti, for inviting us. And this report, in fact, is one of the crucial steps in mobilizing the EV finance in India. In fact, what we believe is that there are so many things which has to be done in EV, right from the range anxiety, right from the infrastructure creation. But one of the key things which has to be dealt with right now is the EV financing. And we thought that this is the right time for us to actually target what are the things which we have to focus. So there are many causes, there are many barriers, and there are many solutions which can be proposed for this. So within this report, we tried to address those things. First part is about the barriers, what are the underlying causes like the operational risk, customer risk, utilization risk, basically clubbed in a business model risk. The second part is comprises of the asset risk and the solution for those things. So we identified the solution into the 10 steps. Out of those 10, 4 are the enablers and the 6 are the targeted solutions. So what we see is in the coming future, if the business model financing and the different types of instruments can be used together for different segments, like two-wheelers will have a different requirement of financing. Three-wheelers have a different requirement of financing because the customer base for the three-wheelers is totally different. They don't have their, the credit history is not available. So they go to the unorganized sector instead of going to the banks and NBFCs. So the different sectors have their different requirements. We try to highlight all those things in our report. What is the policy risk? What are the manufacturer risk and the resale risk, which is actually right now the biggest. There is no secondary market available for the EVs as of now. And this actually hinders the FIs, financial institutions, to invest and to give the loans at the rates equivalent to the ICE vehicles. We need some of the efforts which, in fact, SBI has taken for the four-wheelers. Similar efforts are required for the two-wheelers also, which is 84% right now in India, two-wheelers and three-wheelers combined. So India is primarily a two-wheeler market, not the four-wheeler market. Plus, in the shared mobility, in the space of the bus, we also need to mobilize the finance in this direction.
All right, so those were the broad highlights. And coming to you, Akshama, the report also identifies a market size of 3.7 lakh crore for the financing of EVs in 2030, about 80% of the current size of India's retail vehicle finance industry, worth 4.5 lakh crore today. How do we mobilize that kind of finance?
Thanks, Kriti. So I think what will be important is right now, as we have highlighted in the report and what Randhir also highlighted, there are two critical risks right now, which is the technology or the asset risk, and the other is the business model risk that is right now associated with EVs, given that they are too nascent. The experience of all stakeholders, including financial institutions, is very limited. So to mobilize the kind of capital that we've estimated in the report, we would need a lot of financial innovation in parallel to the technological innovation that is happening. And that essentially, we've kind of suggested specific instruments that will be very critical initially to be mobilized to create this market. Some of the things that we've highlighted in the report, we could use instruments like priority sector lending, where RBI would, kind of include EVs as part of priority sector lending guidelines for the banks. That would create and push banks to increase their lending towards EVs. We've also suggested, initially, like what Delhi government has done, and many other state governments are considering creating interest rate subvention schemes, which would lead to, covering part of the interest right now for EVs, interest rates, which is pretty high, by the government, state governments. So that is another instrument that can be mobilized at this moment. Then there is another part that OEMs and the battery manufacturers, the suppliers would have to do around product guarantees and warranties. So this is essentially, a lot of this would cover the asset risk or reduce the asset risk, in addition to, what Randhir also mentioned earlier, creating a resale market. Again, financial institutions would see that risk coming down if we were to make our efforts towards, creating a secondary market by the right kind of policies. Beyond that, I think there is a need for innovation around risk-sharing mechanisms, which is what we also highlight in the report. Government, multilateral, banks and institutions like World Bank, ADB, and a lot of fleet operators who are now in this whole ecosystem, they need to come forward and create and be part of, risk-sharing mechanism that can either partly or entirely cover the kind of losses that are expected if the technology fails, or, there are whatever risks are coming along with the business model and the asset. So a lot of this needs to be put in place. This innovation needs to be brought on essentially in the next 1 to 2 years to really accelerate, as we hope EVs would in the future.
All right, ma'am, you talked about priority sector lending, and just to get a clarity on that, Randhir, as the report has recommended Reserve Bank of India to allow banks to finance EVs under the priority sector lending category, what would it entail for the EV segment?
Within the priority sector lending, RBI actually mandates that 40% of the total credit loans, that's the total credit book, should be towards the priority sector, and that there are certain lists which has already been finalized, and it has been already given to the banks. So if EV financing comes under the priority sector lending, of course there are benefits in terms of the interest rate, which is of course going to be lower than the current market rate. For example, SBI was giving the loan to the four-wheelers at 9.52% for the IC vehicles, internal combustion engine vehicles. And if it comes under the priority sector lending, then it would be around 5 to 6%. So that type of gap we can see. And of course, this not only brings the upfront cost down, but also the financing cost down. And in India, if we see how much financing is being done for the four-wheelers, almost 50% of the vehicles are being taken on finance in terms of the four-wheelers. For the financing in terms of the two and three-wheelers, since the LTV ratio is around 70 to 75%, so people have to put so much money, around 25 to 30% from their own pocket. So if this interest rate goes down, then they can actually, give more money, put more equity in buying all these vehicles. So I think this is something which would be targeted, which would be addressed by putting this in the priority sector lending. Plus, there is another thing which maybe I can highlight here is the infrastructure status. So this is from the manufacturing side. So we have to actually cater to the supply side as well as the demand side also. So the demand side would be from the PSL at the retail customer. But then if we talk about the manufacturing of these units, they also need a lot of debt financing. And to get this debt financing, since the demand certainty is not there, so the banks are a bit hesitant to lend to these manufacturers, EV manufacturers also. So there in the infrastructure status is something which would actually help the banks to get the loans at the cheaper rates. Plus the external commercial borrowings limits would be different in those cases. They are separate. It's a separate thing altogether, and which helps the manufacturers to actually finance their manufacturing units, their future plans, expansions, to establish the units. So we have to work from the both sides, PSL in the retail side and the infrastructure status from the manufacturing side.
All right, so infra status and also priority sector lending would go a long way in financing EVs in India. But Akshama, there are also recommendations on digital lending, business model innovation, fleet and aggregator electrification targets, and the creation of an open data repository for the EVs. Help us understand these concepts.
So, Triti, what we are seeing is that most importantly, I'll just start with the last one that you said, which is open data repository for EVs.
Please go ahead.
Right. Yeah. Right now, the experience with EVs and EV technology is very limited. And that's why what we see is that the financial institutions, they are hesitant in terms of, investing or financing the technology per se. So what we recommended is that as we are electrifying, our transportation fleets, we need to create and share that data with the entire ecosystem, including financial institutions. They need to access data like, how the technology is performing, what is the real, world driving cycles, and what is the range that is being given, what is the real driving costs, operating expenditures. Once financial institutions have access to this information based on, whatever fleet is now being deployed on ground in India, that would give them a lot of understanding of the technology performance and hence understanding of the risk. Right now, that understanding of risk is limited, and that therefore, puts them in a very cautionary mode in terms of giving out financing. So that's one. So we are suggesting creation of this repository of data on EV, and the experience with EV technology. The other is that, business model innovation. Again, more and more pilots are needed. We need to have, and support more business model and see what is working. And as Randhir said, he talked about demand and supply. One is also, the EV deployment and also business model on the charging infrastructure, for example. So right now, the fleet operation, how they are happening, what is the innovation that is happening. We need to kind of understand that and understand what's working, but also on the charging infrastructure side. Right now we are experiencing, and we would for some time experience very low utilization rates of charging infrastructure. So what business models can be used? What can be the government support? So all of this, will help financial institutions understand the performance of the technology, how different business models will perform, and hence, design their financing schemes and financing packages. On digital lending, we're really talking about, digital sourcing, underwriting, and sanctioning of EV loans, so that the logistics cost or the logistics challenges that the financial institutions are likely to face in terms of lending for EVs, those are reduced. And then you're also suggesting that more and more of fleets are encouraged, because you're talking about, adoption at more scale than we're talking about, individual ownership. So that's really, we are saying that along with the kind of instruments of PSL, interest subvention, these are additional ecosystem enablers that we need to kind of, trigger off to accelerate EV adoption.
All right, so those were the financial models that we were talking about. But I'd also like to touch upon the difficulties that we face. Randhir, end users currently face several challenges such as high interest rates, high insurance rates, and also low loan to value ratios. What are the solutions that are recommended in this report?
Kriti, you are right at the point that these are the things which, as a customer, everybody is facing as of now. So, in fact, before that, I would like to point out one thing, which is a part of a solution, and we call it as an enabler in our report, is the digital lending. So you would be surprised to see that in 2019, around out of the total loans, 5.7% were digitally executed. And out of these 5.7%, only 5% were for vehicles. So we see a lot of scope that these are the things, the digital lending, they will enable the low cost, low ticket loans. And these low ticket loans are going to support the two-wheeler and three-wheeler, electric three-wheelers proliferation in our country. So this is one of the enabler which has to be, not only identified, but also to be implemented in a targeted manner, the digital lending part, to address the low LTV ratios, to address the collateral issues, and also to address the unavailability of the credit history mainly for the two and three wheelers. three-wheeler buyers. So what is happening right now in market is if you are a first-time buyer and if you don't have your credit history available, then even if the instrument is available, that means the banks are ready to give the loans to you, but unavailability of your credit history, collaterals, these things actually push you that you cannot get the loans from the organized sector, and these people then move towards the unorganized sector, wherein of course the risk is high, so you will get the loans at the 23 to 24% rate compared to the 9 to 10% or 11% for the internal combustion engine vehicles. So digital lending will actually help to also build the credit history of the first time buyers. So this is one of the very specific tool which could be deployed at a low cost and also will help to build the credit history for the long-term financing.
All right, expanding the scope of the debate, Akshama, how has the pandemic changed the dynamics of the Indian EV market, and what are your projections about the segment for 2021?
So I think COVID has affected the entire automotive, sector demand, and so has EVs. Sector also affected the demand for EVs. What we expected in terms of growth, we've not seen that kind of growth.
Yes.
But the positive thing is that we are seeing kind of a rebound of demand in the entire vehicle industry, including EVs. The kind of numbers that we are seeing, they're showing that there is a revival of the demand. But at the same time, I would highlight that, while the demand has gone down, the investments, thankfully, what we see are increasing. We've seen over years, and particularly in the last 2-3 years, the financing, particularly in the EV startup world, for example, increasing. There is a lot of momentum you must have seen, which is in terms of investments into manufacturing plants for EVs. So all of that is giving us hope that, yes, COVID has happened. It has affected the demand. It has affected the supply side, the supply chains. Next 2 to 3 years will hopefully, erase some of what damage has been done to the EV transition, and we will hopefully have more investment, more models coming out, and increasing demand. And I think last point I want to highlight there is that while COVID has affected demand, it has also made us understand the value of clean environment and clean air.
Yes.
So hopefully it is going to lead to a consumer behavior shift in terms of an increasing demand for cleaner vehicles, and hopefully that will be EVs.
Well, absolutely, we do hope that. But another important aspect, Randhir, what are the challenges of upscaling EV battery manufacturing units in the country, and what are some of the battery innovations in the EV ecosystem today?
Okay, so actually right now, this is very right time when you ask this question, because under the PLI scheme, government has actually launched advanced chemistry cells program with an outlay of around 2.4 billion US dollar, that is 18,100 crores for the period of the 5 years. So this is targeted mainly to the advanced chemistry cells, which is lithium and more, on the basis of the performance of the battery. Basically, it's a matrix that how much total efficiency of the battery. This is going to be the parameter to be measured. This is basically to not only to trigger the cell manufacturing, but also scale it up from 5 gigawatt hour to the 50 gigawatt hour. So the total plan is around 50 gigawatt hour under this program, advanced chemistry cells program. Plus, as a country, we also have to look to other measures wherein the lithium requirement is less or no. So in terms of those chemistries, the aluminium air is the one chemistry, aluminium metal is the one chemistry, sodium ion we can look at it, and also the supercapacitors. In fact, one of the companies in the Bangalore, the name of the company is Log9. They are working on the supercapacitors and at advanced stages. Then for the sodium ion, there is a company called Finergy, it's an Israel-based company. So they have already, they have a tie-up with the Indian Oil Corporation, and they are testing their sodium ion batteries in India with the Mahindra Treo. So these are some of the chemistries which we can look at in the next 5 to 10 years. But in the very long term, of course, the hydrogen is going to be the solution for the freight and for the industrial solutions also. So we also need to look in innovation and R&D for these type of technologies in future.
Absolutely, innovation and R&D gains paramount importance. But Akshama, I'd like to understand, How do we revolutionize last mile connectivity in India through EVs?
Good news is that there is already an increasing commitment from e-commerce players, e-logistics players, in this whole domain where they are committing to more and more EVs. You would have heard news of Flipkart and Amazon all trying to, commit and coming forward and saying that they will transition to EVs. So in the last mile delivery, hopefully the fact that these big players are taking the lead would set the momentum. Second thing we need to, and already we are starting to see is happening, is that many of the state EV policies are trying to some extent, mandate fleet electrification. So they are saying, for example, Delhi EV policy says that, sooner or later you will have to electrify most of your last mile delivery fleet if you're operating in Delhi. So some of these kind of mandates and, already the commitment being shown from industry, all of this would help. And I think third most important thing is also demand coming from consumers. I think we as consumers have to also start demanding clean delivery of goods and services to us, because we cannot be party to polluting the air in our cities. So all of this forces coming together along with the government incentives, the financing solutions will help us enable this segment to electrify faster. And one important point to note here, Kriti, is that already the vehicles that are being used in this segment are at cost parity, almost there. So no more we have to say that, well, the technology or the cost of vehicles is higher. They are pretty much at a stage that they are ready to really kick off from here.
Okay, that's a very valid point that you're making, ma'am. And before we end this conversation, closing comments from both my guests. Mr. Singh, economic, social and environmental benefits for the country of EVs.
So in terms of the economics, I think we are, for the two-wheelers and three-wheelers, we are already here. In the coming 2 years, we already see that in the last decade, the battery prices have come down by 84%. And this shift is going to continue for 2022, when the prices of the batteries and the cell is going to be less than $100 per kilowatt hour. That is the inflection point which we are looking for. And once this inflection point is reached, then we would be at par without any subsidy in terms of the four-wheelers also. And there are certain parameters which we have to consider in terms of the inflection point. One is the availability of financing, reliability of the battery technology, reduction in battery prices, in the same trend, development of the service network, and the well-established charging infrastructure.
All right, Akshama, do you agree?
Yeah, absolutely. And I think I would just add and bring a more higher level perspective that, all of this, when we're talking about through this report, on financing and handling many other challenges in the EV ecosystem, why are we really doing that as a country? I really want to bring attention to that point, is that India as a country, we do not have oil. And we are importing almost 90% of our oil requirement. And this translates into almost, 8 lakh crores being spent every year on importing oil and, oil products. And just to give you an estimate, as a country, our budget, the current budget is about 30 lakh crores. So, 8 lakh crore versus 30 lakh crore. So that's the magnitude of money that we as a nation are spending on oil and oil imports. I think just from a geopolitical perspective, from a low emission world and low, clean energy future perspective, this is something that we cannot, afford to continue as a nation. And we need to transition to EVs at the earliest, and cleaner technologies as well, beyond EVs. So this transition is very important. We need to accelerate it, and solutions like what we have talked in the report jointly as Niti Aayog and RMI will be important, and we are hoping that the stakeholders can, pick up these solutions and implement them.
All right, so the onus lies on all of us for this transition. On that note, thank you so much for joining us on this discussion. And as the economics of EVs continue to improve, new business models and financing instruments gain acceptance, and government programs drive early adoption and promotion of domestic manufacturing, India's EV market is poised for growth in the coming decade. Well, that's all we have for you in this edition of Policy Watch. Thanks for watching and stay tuned.